Welcome back to the Deep Dive. Today, we have a story that, honestly, it feels less like a corporate report and more like a script for a high-stakes drama.
Yeah, it really does.
It all starts with this romantic, almost utopian dream in a small Turkish town back in the 1970s. We're talking about a whole community pooling their lunch money to build a future.
It's an incredible origin story.
And it ends, or, well, I guess it lands us right here, in 2026, smack in the middle of a corporate thriller. There are massive debts, last-minute Supreme Court rulings, and a plot of land that might just be worth more than the entire business itself.
It's a fascinating case study in survival, I think, and, evolution. It's about what happens when this kind of legacy company meets modern financial engineering.
Exactly.
We're looking at a company that is, on paper, a textile manufacturer. But when you really start to peel back the layers of their 2025 annual activity report, you have to ask yourself,
Are they actually in the carpet business anymore?
right, or are they maybe unwittingly or, perhaps very wittingly sitting on a massive real estate lottery ticket?
That is the tension, isn't it? That's what we're going to wrestle with for the next hour. The company in the spotlight today is Birko Koyunlular Mensuket Ticaret Vesanai A, ticker symbol BRKO.
That's a mouthful.
It is. And the documents we have on the desk, they are fresh, hot off the press. We are analyzing their annual activity report for the period of January 1st, 2025 to December 31st, 2025.
And just to set the context for everyone listening, today is Tuesday, February 17th, 2026. This report was literally just released. So we're looking at the immediate aftermath of what appears to be a pivotal, maybe even a life-saving turnaround year for them.
Okay, so before we get into the nitty-gritty of, balance sheets and legal battles, let's start with that origin story I mentioned.
Right.
Because I think to understand Birko today,
Yeah,
you really have to understand Birko, the dream.
I agree. The name itself, Birleşik Koyunlular, it literally translates to United People of Koyunlu.
It's so evocative.
It is. It's a very nostalgic, almost romantic history that you just don't see in modern stock markets. The company wasn't founded by some singular tycoon or a wealthy family or a private equity firm.
No.
It was founded in 1972 by the townspeople of Koyunlu, the actual residents.
I love this part of the story. It's like a community crowdfunding project before the internet even existed.
That's a perfect analogy. It really is. The source material describes how the prominent figures of the town, along with the regular citizens, we're talking teachers, farmers, shopkeepers, they decided they needed to change their own destiny.
They didn't want to just rely on agriculture or see their kids migrate to the big cities for work.
Exactly. They wanted industry right there in Nide. So they pooled their small savings, literally whatever they could afford, to create what they called a giant industrial establishment.
And you know what? For a long time, it really worked, didn't it?
Oh, absolutely.
Yeah.
They built this huge factory in the organized industrial zone in Nide in Bor. At their peak, they employed over 1,700 people.
Wow. 1,700.
It was held up as a model for Turkish industrialization. This idea of how small capital could aggregate into something massive. A real point of national pride.
But that just makes the contrast with today so stark.
It really does.
And we are going to explore this in detail later, but just to give you a teaser of why this deep dive is so interesting, we've gone from a bustling factory of 1,700 people to a 2025 report that lists the average number of personnel as, well, it's 27.
Wait, 27.
27.
You're kidding.
I wish I were. We are talking about a giant industrial establishment. A massive factory site in Nide, a historic brand.
Run by 27 people.
That is the statistic that just stops you in your tracks.
It does. I mean, my first thought is, how do you even run a carpet factory with 27 people?
Right. Who's running the looms? Who's doing the dyeing? Who is shipping the product?
That is the central mystery we need to try and solve today. Does 27 employees mean the factory is, for all intents and purposes, dead?
Or does it mean the business model has completely shifted? Is Birko rising from the ashes to weave carpets again?
Or is it actually a real estate asset play, where the factory is just a kind of placeholder for the incredibly valuable land it sits on?
That is the multi-billion-lira question. And as always, just a quick disclaimer before we dive in. We are providing an impartial breakdown of the source material. We are not financial advisors. This is not investment advice, and we don't take any sides.
Exactly. We're just two people reading a report very, very closely and trying to figure out what the story is.
Okay, let's unpack this. Let's first get to know the company a little. Who are they right now on paper?
So legally, they are Birko Bilişik Koyunlular Mensikat Ticaret ve Sanayi. Their headquarters, interestingly, are in Kavacık, Beykoz in Istanbul.
So not a knees day.
The corporate brain is in Istanbul, but the heart of the operation, the production facility, is still in that organized industrial zone in Nizdebor.
And their main brand is one that a lot of people might recognize, especially if they've been around Turkey for a few decades. Koyunlu Koyunlu carpet.
Right. The brand itself was established back in 1981. And what's interesting about their identity, even today in 2025, is how specific they are about their product philosophy.
They seem very proud of it.
Very. The report explicitly states, and they use bold terms for this, that they do not use polyester.
It's all about sustainable quality.
It is. They focus on wool, fiber, and viscose. They are really trying to position themselves as the natural choice in a market that's just flooded with synthetic, petroleum-based carpets.
They want to be the healthy, long-lasting option.
Which is a bit ironic when you consider the chairman's background, but we'll definitely get to that.
Okay, that's a novel positioning. But let's look at who actually owns this natural choice today. Because if it started as a town collective, the ownership structure must have shifted dramatically over 50-plus years.
Oh, it has. The shareholding structure is quite unique. The company has a paid-in capital of 140 million TL. Now, that was increased from 120 million TL just last year in 2024.
Okay, so a recent capital injection.
Yeah.
And who put up that extra cash?
A targeted capital increase was done by a shareholder named Nurhan Ocalan. As a result of that, Nurhan Ocalan now holds about 13.90% of the company.
13.9%. So it's a significant stake, but not a majority.
Not even close. But here is the number that really jumps out at you. The other category, which is basically the public free float, is 86.0%.
Wow. 86%. That is exceptionally high.
It's huge.
Usually you see a controlling family or maybe a holding company with 50 or 60% and the rest is public. But here, the vast majority of the company is just out there in the hands of the public market.
It's extremely fragmented, which makes the company very susceptible to market movements and, at least in theory, to things like shareholder activism. However,
There's always a however.
when we looked at the board of directors, it becomes very clear who is in the driver's seat.
It's the Ocalan family, right?
It is. The chairman of the board is Zet Ocalan. The vice chairman is Tunke Ocalan. And then you have Nurhan Ocalan as that major shareholder who just injected the capital. So despite that high free float, the strategic direction is very much coming from this one family.
And I noticed something about the board composition in the report. We talk a lot about diversity in corporate governance these days. How does Birko stack up on that front?
Not well, to be honest.
I didn't think so.
The board members listed are Azet Ocalan, Tunke Ocalan, Mustafa Kungar, Tugay Fidan, Harun Shaheen, and Ozushan Aksoy.
All men.
0 female board members listed.
That really feels like a miss, doesn't it? Especially for a company that originated from a town where, historically, the textile tradition was often carried by the women of the community.
That's a great point.
It's a bit of a disconnect to have no female representation at the top level in 2025.
It is a sharp observation. The company's history highlights this collective community effort, but the 2025 boardroom is very, very homogenous.
And speaking of that boardroom, do we know what they're getting paid for their service?
I did check the compensation section. The report lists the total attendance fees, or huzurhake as it's known, for top management in 2025.
And the number is?
Approximately 2.7 million TL gross.
2.7 million. So in the grand scheme of corporate executive pay for a company with, say, 160 million in revenue, that's not astronomical.
No, it's not. It's actually quite modest compared to some of the giants you see on the BS200.
True, but for a company that, as we're about to see, has been struggling with cash flow, it only has, again, 27 employees. Every lira counts.
Of course.
It raises that classic question. Are they getting paid for performance or just for showing up?
But that's always the question with huzurhake, isn't it? But let's go back to that number you teased in the intro, the employee count. Because I really want to dig into this sector and competitive environment, but we can't do that without first addressing the scale of their operations, or I guess the lack thereof.
Yes. Let's look at the sector and competitive environment, but keep that 27 people number in the back of your mind. How does Birko even try to position itself in the market?
They position themselves squarely in the premium segment. They are trying to separate themselves from the mass market machine-made carpets, which are, usually polyester or polypropylene.
The cheap and cheerful stuff.
Exactly. They're doubling down on what they call the 100% natural wool group. They highlight things like heat insulation, sound insulation, and durability. They also have a natural root dye collection, which they say uses traditional methods and special boilers. It all sounds very artisanal.
And they even updated their branding in 2025 to reflect this, right? After 50 years, they changed the logo.
They did. And the color choice is fascinating. They officially switched their brand color to Edern Red.
Edern Red, I have to admit, I haven't heard of that one.
It's a historical Ottoman color. The idea, according to the report, is to symbolize heritage meeting modernity.
That's actually a pretty nice marketing touch.
It is. It shows they are thinking about the brand image, trying to revitalize it. They're trying to say, we aren't just an old, dusty factory. We are a heritage brand.
Okay, so if we were to do a quick SWOT analysis based on the report, strengths, weaknesses, opportunities, threats, what would that look like?
All right. For strengths, you've got the Koyunlu brand name, which still carries a lot of weight and nostalgia in Turkey. You have massive, and I mean massive, real estate assets, specifically that land in Niğde. And, as we'll get into, they managed to successfully restructure their crushing debt load in 2025.
Okay, and on the flip side, weaknesses.
Well, the most glaring one is the employee count. 27 people. It's a huge weakness for operational capability. It implies they are incredibly fragile.
It's hard to scale with 27 people.
You can't. Also, their reliance on external financing to clear past hurdles. They're basically borrowing to pay off old problems. And frankly, the level of operational activity seems very, very low compared to the sheer size of the assets they're sitting on.
Makes sense. What about opportunities?
Management has laid out a 2026 strategy to expand to all 81 provinces in Turkey. They have a sales target of 600,000 square meters. And of course, the biggest opportunity of all is the real estate development potential on their land. That's the lottery ticket.
And finally, the threats. What keeps them up at night?
Legal proceedings. We're going to talk about a near-death experience with a lawsuit very shortly. Also, inflation. Producing high-quality wool carpets is expensive, and if consumer purchasing power continues to drop, premium carpets are a very hard sell. It's a luxury, not a necessity.
That's a very clear picture. So with that in mind, now let's take a closer look at what management is telling us, specifically the chairman, Zed Okalin.
Right. His message in the report really sets the tone for the whole year.
What's his vibe? Is he overly optimistic? Is he realistic?
His theme is very much restructuring and cleaning up. He describes 2025 not just as an adaptation process, but as a time of strengthening and renewal.
Standard corporate speak.
To a degree. But here is where you have to read between the lines. He explicitly mentions his own background in the energy and petroleum sectors, which he's been in since 2001.
So he's not a carpet guy. He's an oil and gas guy.
Not originally, no. And that's really important. He brings a different kind of discipline, perhaps a more financial or asset-based discipline, than someone who grew up on the factory floor listening to the looms.
That's a good point.
He talks about bringing that kind of corporate structure to Birko. He isn't talking about weave counts or new designs. He's talking about the balance sheet.
And what are his stated goals for 2026? What's the plan?
He wants a dealership and store network in every single province, all 81 of them.
Which, again, seems ambitious for a team of 27 people.
Very. He also wants to hit that 600,000 square meter annual sales target. But then he drops this line, and this is the important one. Evaluating the company's real estate assets for value-enhancing projects and completing zoning processes.
Value-enhancing projects. That is classic corporate speak for, we might build condos or a shopping mall, isn't it?
Or sell the land to someone who will. It's a very clear signal that the land is a major part of the strategy going forward.
So the overall tone of the management commentary is what?
I'd say realistic yet optimistic. They are very open about the difficult past. They mention legal executions, debts, liens, but they claim the legal and financial structure has been stabilized.
It really feels like the entire narrative is heavily skewed towards the financial engineering side of things.
Oh, yeah?
Paying debts, clearing liens, rather than, hey, we designed this amazing new carpet pattern that everyone loves.
Precisely. It's a turnaround story, absolutely. But it's a balance sheet turnaround first and an operational turnaround, maybe second.
So let's get into those operational insights then, because I'm still stuck on the 27 people. How do they actually sell these carpets if they don't have their own stores and they have hardly any staff?
They use a dealership model. They call their dealers distinguished business partners.
So they're not running their own retail.
No, they don't own any retail locations. They also mention project-based collaborations, so selling directly to hotels, offices, that sort of thing. For example, they mention granting a regional dealership to a company called Esla Proje Mühendislik for the eastern and southeastern Anatolia regions.
So they are essentially outsourcing the entire sales and distribution legwork.
Yes. And honestly, it's possible they might be outsourcing some of the production too. The report says raw material procurement, mostly yarn, has accelerated, and they mention increasing capacity utilization.
But with 27 people, that sounds like they might be doing just the final finishing or maybe just the logistics and quality control and then contracting out the actual heavy weaving to other factories in the industrial zone.
That's one theory. Or the factory is incredibly highly automated, but even then, 27 is an unbelievably low number for 3 shifts.
It suggests the factory might be operating more like a trading house or an assembly point at the moment.
Exactly. It's more of a brand and logistics hub than a full-scale manufacturing plant as it stands.
Okay, let's talk numbers. This is where it gets really interesting. Financial performance 2025 versus 2024. How do they do on the top line?
This is where we need to put our detective hats on. Revenue was 160.7 million TL, which is up from 102.4 million TL the previous year.
Okay, so that's a decent jump, about 60% growth.
It is.
Not bad. That beats inflation. Well, just about. And what about the bottom line? Net profit.
Net profit was 138.1 million TL.
Wait a second. Can you repeat that?
138.1 million Turkish lira.
Revenue was 160 million and net profit was 138 million. That's an insane margin. That's like an 85% net profit margin.
It is. It's completely unbelievable.
How is that even possible in manufacturing? You have the cost of goods sold, you have energy costs, you have wages for those 27 people. You cannot keep 85 cents of every dollar you sell as profit.
You can't. Not in textiles. Not in any manufacturing business, really. This is the big aha moment in the report.
So what's the trick?
If you dig into the income statement, there is a very specific line item. It's called monetary gain, or parasal kazanç in Turkish. That single line item is responsible for 130.7 million TL of the profit.
Ah, so this is inflation accounting.
Exactly. And we should probably explain this because it confuses a lot of people who aren't used to looking at reports from high inflation economies.
Please do.
Okay, so in a high inflation environment like Turkey, the accounting standards, specifically TMS 29, require companies to adjust the value of their non-monetary assets to account for the loss in value of the currency.
So because Birko sits on this massive factory and these huge plots of land, which are non-monetary assets, and the lira lost value, the accounting rules say, hey, your land is worth more liras now, so we will record that difference as a gain on your income statement.
That's a perfect way to put it. It corrects the balance sheet to reflect current purchasing power.
Yeah.
So that 130 million TL gain, it's a paper profit. It's not cash sitting in the bank that they made from selling carpets.
It's an accounting adjustment showing that their physical assets held their value better than the cash did.
Precisely.
So if we strip that out, what's the real operating profit? Did they actually make any money selling rugs?
If you look at the operating profit before all the accounting magic, it's roughly 22.6 million TL.
Okay, 22.6 million. So it is positive.
It's good.
It is good. It's very good. It shows the core business isn't bleeding cash anymore. But it's not 138 million. The massive headline profit number is largely an accounting phenomenon driven by their huge asset base.
That is such a crucial distinction for a potential investor or even just an observer to understand. You see the headline, record profit, and you think they sold a mountain of carpets.
When in reality, their land just got more valuable on paper.
Right. And speaking of paper, we also have to look at the other side of the balance sheet. Their borrowing, their debt.
Yes, their financial debt absolutely skyrocketed. It went to 162.8 million TL. To put that in perspective, in 2024, it was only about 19.7 million. That is a huge increase in leverage, an 8-fold increase. Why on earth did they load up on so much debt all of a sudden?
It was a very deliberate, very strategic move. They borrowed fresh money to pay off all their old, toxic, distressed debt.
So a debt refinancing on a grand scale.
Exactly. They had overdue tax debts, Social Security debts, worker claims from years and years ago, and a messy restructuring deal with another bank, Odea Bank. They essentially took out one big clean loan to wipe the slate clean.
Which brings us directly to the risk factor section. Because you don't clean a slate unless it was really, really dirty. And there was one story in this report that literally had me on the edge of my seat, the saga of Me Like Textile.
This is, without a doubt, the most critical disclosure in the entire report. It highlights just how close Birko came to total, absolute disaster.
Walk us through it. This really does sound like a movie plot.
So Milek Textile is a supplier. They sued Birko for about 4.6 million TL in unpaid bills. These bills dated back to 2020 and 2021.
Okay, 4.6 million. It's not a small amount of money, but for a company sitting on billions in assets, it shouldn't be life-threatening.
You would think. But things escalated very quickly. Milek Textile initiated foreclosure proceedings. And they didn't just go after a bank account or some old equipment. They went after the crown jewel.
The land.
The land. Specifically, a massive 102,000 square meter plot owned by Birko.
100,000 square meter plot. For a 4.5 million lira debt? That seems disproportionate.
It does, and here is where it gets absolutely terrifying for the shareholders. The land was officially valued at roughly 102 million TL at the time.
Okay.
But in the foreclosure auction, which happened in late 2024, it was sold for only 53 million TL.
Oh my God. They sold a 100 million lira asset for 53 million to cover a 4 million debt. That is a catastrophe. That is just absolute value destruction.
It would have been the end of the company's asset base as we know it. But Birko fought back tooth and nail. They went to court to annul the sale, arguing the tender was mishandled and the price was too low. The local court rejected them. The regional court rejected them.
No way. So they were losing at every single step of the appeal process.
They were, until they got to the final step, the Supreme Court, the Yargate. And in June of 2025, just a few months ago, relative to this report's timeline, the Supreme Court overturned the sale.
They were saved by the bell.
Literally, in the final round, the Supreme Court ruled in their favor, the auction was canceled, and Birko managed to keep its land. The report says they are now in the process of negotiating to pay the original debt and close the file for good.
Wow.
But just imagine for a second, if that Supreme Court ruling had gone the other way, this company would look completely different today. They would have lost their single biggest asset for pennies on the dollar.
That is unbelievably close. It really shows how dangerous those lingering legal risks can be. It also explains why they were so desperate to borrow that 150 million TL from Teria Truum Bank this year.
Of course.
They needed to pay off these kinds of threats so they could never, ever happen again.
That's it, exactly. The report mentions they took that 150 million TL loan specifically to pay off their SGK Social Security debts, their tax debts, and to settle about 105 separate legal files related to past worker claims.
105 lawsuits.
105. They paid out 42 million TL just to clear those worker lawsuits alone.
So the strategy makes perfect sense now. You load up on one big manageable bank loan, and you use it to kill all the little legal piranhas that have been eating the company alive for years.
That's the strategy in a nutshell. It's a consolidation of risk. Instead of fighting 105 different lawsuits and tax collectors, you just have to deal with one entity, Teria Truum Bank.
Right. Speaking of risks and corporate structure, let's circle back to corporate governance for a moment. We mentioned the Oakland family runs the show, but there's a detail about personal guarantees that I found really interesting.
Yes, that's a key point. For that 200 million TL credit line they secured, which includes the big Terra loan, Chairman Izzet Öcalan and shareholder Nurhan Öcalan gave personal guarantees. The Turkish term is kifalet.
Okay, so what does that tell you?
It tells you two things, really. One, it shows they have serious skin in the game. If the company goes bust, the chairman is personally on the hook for that debt. He believes in the turnaround enough to bet his own personal wealth on it.
Which is what you want to see.
It is. But the second thing it tells you is that the company's balance sheet on its own wasn't strong enough to secure that loan. The bank almost certainly said, "We don't trust Birko's assets and cash flow enough. We need your personal assets as collateral, too."
That's a very important nuance. It's a strong sign of commitment from management, but it's also a clear sign of the company's underlying financial fragility at the time.
Exactly. And just one more point on governance regarding shareholder rights. It's worth noting that there are no privileged shares. One share equals one vote. Simple as that. And cumulative voting was removed back in 2016.
Which means if you're a minority shareholder, you are basically just along for the ride. You don't have any special powers to appoint board members or anything like that.
You're in the back seat, and the Öcalan family is driving.
Okay, we've covered the romantic history, the operations, the 27 lonely employees, the near-death experience in the Supreme Court, but we've not yet talked about the elephant in the room. Or maybe I should say the gold mine sitting under the factory.
The post-balance sheet events, This is the bomb, as you called it earlier, hidden away in the footnotes of the report.
The valuation report. I'm not kidding. I read this part 3 times just to make sure I wasn't seeing extra zeros.
Yeah, it's pretty stunning. So the balance sheet closes on December 31st, 2025. But on January 9th, 2026, just about a month ago from today, they released a new valuation report. It was done by a firm called Bilgi Gerimenkuhl Dazerlim.
And the numbers they came up with are just staggering.
They are. They assess the company's real estate assets. First, the main factory building and the land it sits on, which is Parcel 6, valued at roughly 501.9 million TL.
Okay, $500 million. That's already a huge number.
It is. But then you have the other lands, which are Parcels 2 through 7. They valued those at roughly 1.324 billion TL.
Oh, wait, let me do the math here. So you have 500 million plus 1.3 billion.
You get a total market value for their real estate of approximately 1.826 billion TL.
1.8
Yeah.
billion TL. Let's just pause there for a second. We just said, not even 10 minutes ago, that their total revenue from selling carpets was 160 million TL.
Correct.
So their land is worth more than 11 times their entire annual revenue.
That is the crux of the entire deep dive. That is the whole story right there. You were looking at a company that sells 160 million liras worth of carpet, but it sits on 1.8 billion liras worth of dirt.
This changes the whole narrative, doesn't it?
Sure.
Suddenly, the 27 employees thing makes sense in a completely different way. It's not just a struggling factory. It's a holding company for a massive land bank.
And remember that phrase from the chairman's message? Value-enhancing projects.
Yes.
And remember what we saw in the footnotes about zoning applications?
Yes, I'm looking at that right now. In August of 2025, they applied to the NEDA Special Provincial Administration for an EMAR revised plan, a zoning revision plan.
You don't apply for a zoning revision if you just want to keep grazing sheep or weaving wool. You apply for a zoning revision if you want to increase the construction rights to build housing or commercial centers or mixed-use developments.
And if that zoning revision gets approved,
then that 1.8 billion TL valuation could theoretically go even higher, potentially much higher.
so when you look at it this way, investors aren't really buying a carpet company. They are buying a lottery ticket on a massive real estate development project in NEDA that just happens to have a small carpet factory attached to it.
That is, I think, the most logical and rational way to view the company right now. But we also have to look at the liability side. They have this massive asset, but the question is, can they unlock it?
Liquidity is the problem.
Always. You can't pay wages with land unless you sell it. And as we saw with that Melek textile case, forced sales destroy value. They need to be able to develop it or sell it on their own terms, at their own pace.
There's one more financial footnote that really raised an eyebrow for me. It was under related party transactions.
Ah, yes, the receivable.
Receivables from related parties. 97.8 million TL.
So close to 100 million.
That's nearly 100 million TL that Birko is owed by other entities. And who are these entities?
Usually in these kinds of family-controlled structures, these are other companies that are also owned by the same controlling shareholders. It suggests a significant amount of money is moving between Birko and the Öcalan family's other businesses.
But wait a minute. We just said they went out and borrowed 150 million at presumably high interest rates from a bank. They borrowed 150 million from an external bank, but they have 100 million sitting out there with friends and family, so to speak.
That is the question a sharp analyst would ask at the annual General Assembly. Why are we paying interest to TerraBank if we could just call in the receivables from the related parties?
It's a complex web.
It is. It's not necessarily illegal or improper, but it's a red flag for corporate governance. It shows that capital allocation decisions might be prioritizing the broader group over the specific interests of Birko as a standalone, publicly traded entity.
Okay, so bringing this all together, it's been a journey. We've got the romantic history, the 27 lonely employees, the 1.8 billion lira land, the brush with death in the Supreme Court, and the pivot to Edirne Red. What is the final verdict here?
Well, if we look at the strategic strengths, they have, against all odds, successfully cleaned up a truly toxic balance sheet. That is a huge, huge win. Paying off 105 lawsuits, the tax debts, restructuring the bank loans, that gives them critical breathing room.
And the land.
And obviously, sitting on nearly 2 billion TL of real estate is a massive safety net, provided they don't get forced into selling it in another foreclosure.
Okay, but what about the key long-term risks?
The operational capabilities are still a huge question mark. Can 27 people really scale up to have sales in all 81 provinces? That seems like a massive stretch.
I agree.
And the financial structure, they swapped that old distressed debt for a big chunk of fresh bank debt. Now they have to service that 160 million lira loan. They have to make those monthly payments. Can they generate enough actual cash flow from selling carpets to do that?
Or will they eventually be forced to sell off a piece of land just to pay the bank?
That's a race against time. Can the carpet business grow fast enough to feed the debt, or will the land have to be cannibalized to keep the company afloat?
Or I guess option 3 is that they pivot entirely and just become a real estate developer and the carpets become a kind of heritage side project, a hobby.
It's a very real possibility.
That brings us to our final provocative thought for you, the listener.
Think about this. Birko started as a textile dream, a collective effort of a small town to provide jobs and build a future. Today, when you look at that 1.8 billion TL land valuation and you compare it to the modest textile sales, is Birko still a carpet factory?
Or has it evolved, maybe by necessity, into a massive real estate holding company that is just waiting for the right moment and the right zoning permit to be unlocked?
Is the real value in the wool or is it in the land?
Yeah, the fundamental question.
It is.
We'd love to hear what you think. Let us know in the comments. Are you team wool or team land? And what do you make of that 27 employees statistic? Does it worry you or does it make sense in this context?
And as always, please remember, this was a deep dive into the source material. It was for educational and informational purposes only. It is not investment advice.
If you enjoyed this breakdown and you got some value from it, please take a moment to like, subscribe, and share. It really helps us keep the lights on and allows us to keep doing these deep dives. And if you really found it useful, please consider supporting us via Super Thanks.
Thanks for listening, everyone.
We'll catch you on the next Deep Dive. Bye for now.